Hey, this is Ugur here. Welcome to one and only video for you to understand taxation in the US as a non-resident and non-American. Well, when it comes to having a US source income, taxation can be a little bit confusing or overwhelming, especially if you're not US resident. However, I'm here to tell you everything super simplified for you to understand and answer most of the questions that you might have. Well, this will be a very comprehensive video and I'll be talking all about different type of taxes, tax forms, how to file, different situations, and if it's possible for you to not pay it. A legal disclaimer, I'm not a tax advisor, an IRS representative, any accountant, or a CPA. I made this video out of my own experience with working different legal representatives over the years. First thing first, let's understand different type of taxes. There are 4 different type of taxes that you should be aware of. Number 1, franchise tax. This one is pretty much nothing but just like a Netflix membership fee that the state where your company is located collecting. For example, for Delaware State, it's flat $300. You must pay it regardless of you doing any business or not. But in some states, like Wyoming, it can be different by being called as an annual report, since the governmental agencies in the US are working pretty much like a business. That means they have their own expenses, their own profits. In my opinion, annual report is just another way of collecting the membership fee while you're reporting the status of your company to that particular state. Number 2, sales tax. This is the tax you need to collect from your client depending on which state they're in, and you pay to that state back at the end of the year. Number 3, state tax. You don't need to pay or file this one if your company is based in tax-free states like Delaware, Wyoming, or Florida, only if you do not reside or live in that particular state. That's totally the same for the city tax. And the last most important one, federal income tax. This one has to be filed and paid as long as you having a US source income. Doesn't matter which state in US your business is, or you're not living in the country, it's paid to the federal government, aka the IRS. So what can be US source income? Your US company can have an income. You might be getting a commission, trading in stock market, dealing with crypto. You could have a house and collecting rent, have licensing or royalty deal. Pretty much any business activity would make it. Well, one of the biggest questions I get is, I have a US company, I don't have any physical activity or any office, any employee in the US, or I use US bank account, but there's nothing going on in the US. I sell to Europe, so I don't need to pay taxes, right? Well, if you have a bank account in the US and you're using like US PayPal, US Stripe, that bank account would put you in this US source income status. Only if you have a US company, but your bank account is in your country, the income you will have can be not taxable. And that's for the US, not for your country. So having US source income makes you liable for filing taxes in most of the cases. There can be some situations that your own country may have tax treaty with the US to avoid like double taxation. But mostly if you have US source income, it means you're liable for filing. Well, filing does not necessarily meaning that you need to pay it. I will get to that part at the end of the video. The other question is how to file it. To answer this question, first we need to know what type of your company is because all company types have differences with each other. So let me explain to you one by one with which form you should be using and when are the deadlines for each different type of companies. If you have a single member LLC, when the tax season comes, until the IRS deadline in April 15th, you need to pay the income tax of your company as an individual with the 1040 NR form. The NR standing for non-resident, differentiating itself from the regular 1040 that most of the Americans are using for filing. If your company type is a partnership, which actually is a multi-member LLC, the filing has to be done with 1065 form. For the company, it has to be done before the second week of March. After this filing, the partners in the company get a document that is called K1, Schedule K1. These Schedule K1s are going to be used just like as I explained in single member LLC situation, both of the partners have to pay their taxes individually until the second week of April. So basically, you can understand as filing for the partnership company is not to pay for company, but generate the K1, so each partner can learn a percentage of income they generate and file it individually afterwards. The last company type I want to explain is corporations. The biggest difference between corporations and single or multi-member LLCs is LLC being passed to the entity type, where only individual filing required but not company. However, for corporations, this is not the case. In C corporations, firstly, it's your company who pays taxes by filing 1120 form. After your company pays, depending on the profit you take for the shares you own, every member needs to pay also their individual taxes. So to simplify, it's necessary for every member to pay with 1040 NR. If it's a partnership, aka multi-member LLC, first informing happens with 1065 form to get the K1s for members, and for C corps, first the company pays its own tax with 1120. After that, every member pays individual depending on their profit for their shares. One very other important form you need to file as a non-resident is Form 5472. This is a form that shows and says how much money you take for yourself or to your country. And in case of this form not being used, any transfer can be found. There's a penalty up to $25,000. So 5472 is mostly being filed as well. Also, you as a non-US resident being in need to file taxes individually, the IRS needs to recognize you with a tax identification number, and not being able to have SSN, you must have ITIN number instead. I'll be leaving a link description if you're looking for ITIN number. If we understand what the forms and differentiations of company types are, let's go to the part I'm sure that most of you have been waiting for. I don't want to pay taxes. What to do? Guys, the very first thing everyone is thinking like, oh, I'll make $100,000. I can get big chunk of my money to US taxes. They will eat my like $30,000 out of the $100,000, right? Everyone thinks taxes are the biggest problem for you to make money. Something very easy but important to remember, you only pay a percentage of your net, which means after your expenses, there will be remaining profit. So if you made $100,000 in sales and $9,000 in expenses, you only pay a percentage of the remaining $10,000 profit. So what is the percentage? As I'm making this video today, I already have like 90-37%. This number do vary in many situations, such as you residing in the US, what your total numbers are, having a kid, being married, owning a house, and it goes on. But mostly for non-US resident who does $100,000 in revenue do pay around like 10%. So practically, if you can hire your expenses, since your profit will be lower, you can get to a point of not paying taxes or paying something very low. Even the biggest companies do this in order to avoid taxes. But there are reasons I don't actually recommend doing this, especially if you're thinking anything with your business in the US or anything just in long term. So please let me know if you want me to cover that topic as well. Other question is, what can I use as an expense? Should I keep my receipts and invoices? Well, pretty much everything you can relate to your business, you can write it off as an expense. Like the goods you purchase, ads you pay, commissions you pay your employees, whether they're based in the US or not, even your personal expenses such as like food and transportation. Some billionaires write it off as an expense for the charter jets that they own. It would be good if you keep your invoices and receipts for a few years, but you don't need to provide it to IRS unless they audit you, which is pretty much they're asking for the proof. But chances are low if you're making under than $500,000 annually in revenue. And anyways, let me get that topic to another video as well. So what's the best way to summarize all of this? Is just going with an example. All right, so you're in X country, you don't live in the US, and let's say you sold goods of $100,000, okay? And you're either like selling them on Shopify, on Amazon, whatever you're doing e-commerce or you have consultation business, any type of business. You're not in the US, you made $100,000 and you're a single member LLC. when at the end of the season, all of the revenue that you have from that $100,000, you will also put all of the expenses that you spent. It's up to you to higher or lower your expenses, but like pretty much there can be numbers that you can back if you're going to be doing that hiring and lowering if you want to avoid paying taxes. If you have a single member LLC until April 15th, you need to file 1040 NR form and the 5472. So if you have a multi-member company, let's say you have a partnership company, your partner have 70%, your partner owns the 70%, you own the 30%. First, you guys need to file your company tax, as in like informing, not actually to pay company tax, with 1065. And after that, you need to do the same thing with what I was telling with the single member LLC for each member of the company. And if it's a C corporation, first you need to file your taxes with 1120 form, and then you need to pay the company tax. After that, every shareholder will have their profits for the shares that they own, and from that $100,000, let's say that the other shareholder like have 70 and you did spend like $90,000, $10,000 is your profit. The 70% owner of that C corporation is going to be paying a percentage of that $7,000 out of that 10K profit, because it was 70, and for you it's like 30. 3,000 is your profit, and you'll pay a percentage of that 3,000, and mostly it's about like 10%. And the other important thing, as I was mentioning, it's important to have an ITIN number, since the governmental agencies are not going to be recognizing you, and you not owning an SSN would not be fine for them. Well, I try to cover as much as while making this as simple as I can, which is actually a hard thing to do. One thing I want you to do is please write down a comment, whatever you think, whatever you want to ask further. Let's just talk down there. And thank you for hitting the like button already. Make sure you subscribe to my channel and learn the best way to run a US business as a non-US resident. And I'll get to see you on my next videos.